It's kind of wild when you think about it. You can send money clear across India right from your phone in like seconds. But have you ever wondered how that's even possible? That system, well, it wasn't built in a day. It's actually a 250-year-long story, and it is a dramatic one. We're talking collapses, huge government takeovers, and total revolutions. So let's get right into it. This whole thing basically plays out in three major acts. Okay, so think of this as our map for the journey. It lays out the three big phases we're going to walk through. We'll start with the chaotic early days before independence, then jump into the radical government takeovers that changed everything, and finally, we'll land in the modern era that put a bank right in your pocket. All right, Act 1. Our story kicks off way back in the 18th century. But here's the thing. This wasn't banking for everyday people. Not at all. This first phase was really all about building a financial system that worked for the British colonial rulers and their businesses. It was a time of experimentation, and believe me, there were a lot of errors. This timeline really shows you how things started. Scattered, a little fragile, and then a slow consolidation of power. It all began in 1770 with the Bank of Hindustan, which, spoiler alert, didn't make it. Then you get these three heavy hitters, the presidential banks, which eventually got merged together in 1921 to create the super powerful Imperial Bank of India. One single bank pretty much dominated everything. But here's the crazy part. Outside of those big, stable banks, it was the Wild West. Get this. Before independence, more than 600 banks were registered in the country. 600! And you know how many survived? Almost none. They just vanished. It tells you just how shaky the whole system really was. So that's the big question, right? Why were all these banks just collapsing? Why couldn't they stick around? Well, it turns out it wasn't just a string of bad luck. The whole system was built on a really fragile foundation. And when you look at the reasons, it makes a lot of sense. Just try to imagine a world with no computers, no secure networks, not even any standard training for bankers. Everything was done by hand, which made it super slow and full of mistakes. That, of course, made it easy for fraud to happen. And without proper management, when things started to go bad, they went bad fast. Now we move into Act 2. After India's independence in 1947, a totally new problem emerged. The private banks that existed were all clustered in the cities, and they pretty much ignored everyone in rural India. So the new government came up with a radical idea. If the banks won't go to the people, the government will take the banks to the people. And this quote right here, it gets to the absolute heart of the problem. For most people in rural India, their only option was a local moneylender, which often trapped them in these awful cycles of debt. The government saw this as a huge roadblock to the country's progress. So, what was their solution? Nationalization. It sounds complex, but it's pretty simple. The government just took over the country's biggest private banks. They turned them into public companies with a brand new mission: serve the entire nation, not just the wealthy folks in the cities. And they did not mess around. In 1969, in one bold move, the government nationalized 14 of the biggest commercial banks in the country, basically overnight. It was a massive shock to the system, all aimed at one thing: pushing banking out into the villages. Just take a look at this list. You'll recognize a lot of these names: Bank of India, Punjab National Bank, Canara Bank. In the blink of an eye, the very core of India's banking system was now under direct government control. And the result? A huge expansion of bank branches and credit into rural areas. But they weren't finished yet. Just over a decade later, in 1980, the government decided to double down on the strategy. They went ahead and nationalized another 6 major banks. This second wave really sealed the deal. For the next decade or so, India's banking system was completely dominated by the state. It was all about public service, not private profit. So this government-controlled system had its own problems. Yeah, it got banks into more places, but it was also pretty inefficient, super slow to innovate, and there was zero competition. By the early 1990s, it was obvious that something had to change. And that brings us to Act 3. This slide lays out the shift perfectly. You can see the philosophy just do a complete 180. The focus went from state control to competition. The goal went from just inclusion to a mix of stability and modernization. The whole system was about to be blown wide open. Now, this massive change didn't just happen randomly. It was carefully planned out by a special committee, the Narasimhan Committee, which basically wrote the playbook for a modern competitive banking sector in India. And their ideas, well, they changed everything. And the changes that came out of this were huge. I mean, they completely flipped the script. For the first time in ages, the government started handing out licenses to new private banks. The ones we know today like HDFC and ICICI. They brought in a ton of new energy, new tech. On top of that, foreign banks were finally allowed to set up shop. The government officially said, no more nationalization. And they made the rules fair for everybody, public or private. It was a total game changer. And all of that competition, all that new energy, it set the stage for the biggest transformation of all. The reforms from the 90s created the perfect environment for technology to just explode, leading directly to the banking system we all use today. You could say this isn't a new act, but more like the grand finale of that liberalization era. And the results are literally in the palm of your hand. All that competition led to innovations like payments banks, these new, simpler banks that could work through your phone, and small finance banks for smaller communities. Ultimately, this is what brought us the slick mobile apps and instant money transfers that run India's digital economy. There's a straight line from those policy changes in 1991 to you buying a chai with your phone today. So, what a ride, huh? We've seen banking go through 3 massive transformations. It started as a tool for colonial elites, then became a public service for the masses, and finally, it's this super competitive digital marketplace we have today. The system has had to reinvent itself over and over again, which really just leaves one question. What's the next revolution going to look like?